Hello traders, you're welcome back to the Forex Geek channel. In this video, we are diving into the US30 trading strategy. All right, it's a complete step-by-step guide for beginners. So if you have been looking to trade the US30, also known as the Dow Jones Industrial Average, but you are unsure of where to start, don't worry. By the end of this video, you'll have a solid understanding of how to approach the market, key strategies to use, and the right techniques for trading US30 effectively. Now, before we get started, make sure to hit that like button if you enjoy this content and subscribe to the channel for more in-depth trading tutorials. Also, don't forget to ring the bell so you are notified whenever new videos are up. All right, let us jump in. So what exactly is the US30? Okay, in simple terms, the US30 represents the Dow Jones Industrial Average, a stock market index that includes 30 of the largest publicly traded companies in the United States. Now, the US30 is one of the most popular and widely followed indices in the world, and it is highly liquid, making it a great choice for intraday traders and those looking for short-term movements. All right. Why should you trade US30? Well, one of the biggest advantages is its liquidity, meaning there is always a lot of buying and selling activity. The index also has great volatility, providing traders with the potential for solid price movements throughout the day. Whether you are looking to capitalize on quick, smaller moves or aiming for larger trends, the US30 gives you plenty of opportunities. But before you jump into trading it, it's essential to have a clear plan and strategy in place. All right. Now, let us go over the key aspects of the US30 trading strategy. Now, this strategy is designed to help you get consistent results while managing your risk effectively, okay? However, please take note that the strategy does not guarantee profits, okay? There is no strategy that guarantees profits, all right? Now, going into the strategy, it's important to consider your time frames, okay? The US30 is a fast-moving index, so choosing the right time frame for your trades is essential. For intraday traders, the 1 minute to 15-minute charts are ideal because they allow you to catch smaller moves throughout the day. If you are looking to hold positions a little longer, you can consider the 30-minute or the 1-hour charts. All right. Secondly, let's talk about identifying key levels such as support and resistance zones. Okay. The next step is identifying these important levels on your chart, the support and resistance levels. They are very, very important levels on the chart. Okay. Very important zones on the chart. So a support level is a price level where the market has consistently bounced higher, and resistance is a price level where the market has been unable to break above. To identify these levels, you look at previous swing highs and swing lows. These are often the spots where price will struggle to move past. So you just draw horizontal lines on your chart at these levels where you have multiple rejections, at least 2 rejections around a particular zone. Okay. It's going to give you a visual guide to spot potential reversals and entry points. Now, let's talk about indicators. We're going to be using the moving averages and the RSI. Okay, so let's just add the 50-period moving average to the chart. And then we're also going to add the relative strength index. All right. So to add more confirmation to your strategy, you can use some indicators. For the US30, moving averages and the relative strength index are powerful tools. All right. The 50-period moving average can act as a dynamic support or resistance level. If the price is above the 50-period moving average, the market is likely in an uptrend. And if it is below, the market is likely in a downtrend. Okay. Then the RSI is a great indicator for spotting overbought and oversold conditions. When the RSI is above 70, the market could be overbought. And when it is below 30, the market could be oversold. So these indicators can help you make more informed decisions when entering and exiting the market. Now, let us talk about risk management. Trading without a solid risk management plan is one of the fastest ways to lose your capital. So it's essential to set stop loss orders and take profit targets before entering any trade. For the US30, I recommend a stop loss that is no wider than 50 to 100 pips, or rather 50 to 100 points, right? 50 to 100 points from your entry point, okay? The key here is to make sure your stop loss is within the range of support and resistance levels, so you are not stopped out too early. Now, the next thing is to set your take profits, okay? You can set your take profit target based on previous price action and support or resistance levels. You can aim for at least 1:2 risk to reward ratio, meaning that if your stop loss is 50 points, for example, if you enter a trade and your stop loss at 50 points, your take profit can be around 100 points or more. This way, you are ensuring that your potential reward outweighs the risk. All right. So once you have identified your entry points, set your stop loss and take profit levels accordingly and ensure that the indicators align. Remember that you're using the moving averages and the RSI for confirmations, okay? The price should be below the moving average if you're looking for sell opportunities, and the RSI at the same time should be below the 70 level but above the 30 level. All right, then for a buy trade, if you're looking for buy chances, then the price should be above the moving average and your RSI should be above 30 but below 70. Okay, so for your entry, just wait for the price to break key support or resistance levels, or when an indicator like the RSI confirms an overbought or oversold condition, then your stop loss should be just beyond the most recent swing high or swing low. Swing high for a sell. If you enter a sell, stop loss can be above the swing high. If you enter a buy, stop loss can be below the swing low. All right. Then for your take profit, you can set your take profit order at a price level where the market has shown a tendency to reverse or stall in the past. For example, if you had entered a sell probably around here, you can set your stop loss above this point, right? And then your take profit can be, at a notable support zone, right? Your take profit can be at a notable support zone, ensuring that you have a good risk to reward. So once you have placed your trade, it's important to monitor the market and adjust your stop loss or take profit levels if necessary. Also, keep an eye on any news or events that could affect the market, as US30 is sensitive to economic reports and major market news. So there you have it, a step-by-step guide to trading the US30 as a beginner by using key strategies like identifying support and resistance, applying indicators like moving averages and RSI, and focusing on risk management. You can start trading the US30 with confidence and a clear plan. Remember, trading is a journey and consistency is key. Stay patient, stick to your strategy, and always manage your risk. All right. If you found this video helpful, make sure to like this video and subscribe to the channel for more beginner-friendly trading tutorials and tips. And of course, hit that bell icon to get notified whenever we post a new strategy. Thank you for watching and good luck with your US30 trading.